a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the most interesting new ETFs that launched in the first quarter of this year. So these are all very new ETFs, very unique ETFs, and I'm not saying that they will perform well, but they follow very, interesting strategies, and they are definitely worth a look. So let's dive right in by going to the quote page on Zacks.com. So we are first highlighting these two ETFs which were launched by Submersive Capital in partnership with Unusual Whales. These new ETFs allow investors to trade like members of Congress. So Unusual Whales had published two reports that showed that members of Congress had outperformed the broader indexes in 2021 and 2022 as well, which was a very bad year for almost all asset classes. So these two ETFs, the Democratic Trading ETF ticker symbol NANS and the Republican Trading ETF ticker symbol is CRUZ. So these are actively managed. They come with expense ratio of 75 basis points each, and they will hold a lot of stocks, 500 to 600 stocks. So these firms believe that members of Congress have information, more information, better information than the rest of us. And if we can trade on that information, then we should be able to outperform the broader indexes. Now, over the past few years, we know that multiple lawmakers have introduced bills that aim to ban congressional stock trading, but nothing has been done so far. So let's learn more about these two ETFs by going to these web pages. So you can go to the quote page on Zacks.com, and using the link, you can go to these two web pages. So not surprisingly, the Democratic Trading ETF NANS that holds a lot of big tech companies, Microsoft, Amazon, Apple, Alphabet. These are the top holdings, NVIDIA as well. These are the top holdings in NANS. And let's see what CRUZ holds. So this has a lot of energy companies. Again, no surprise at all. Then one thing which investors should remember that there is a time gap between the actual transactions and then reporting of these trades. So the performance, we know that markets are changing constantly. So the performance may not match the performance of those members of Congress. That is something investors should remember. Then I'm highlighting these two ETFs. Very interesting again, and generated a lot of buzz in the media. These track the recommendations of CNBC personality Jim Cramer. Now, Cramer has a lot of haters and a lot of lovers too. So if you hate Jim Cramer, then there's the inverse Cramer tracker ETF. Ticker symbol is SGIM. Easy to remember. This will hold short positions in his stock picks, stocks that he loves like NVIDIA and Tesla, and it invests in securities that he will recommend against. And then there's the long Cramer tracker ETF. The ticker symbol is LGIM. This will hold stocks that Jim Cramer recommends. These will be actively managed. Expense ratio is a bit high because there would be a lot of turnover, and monitoring those positions will involve a lot of work, 1.2% each. Let's see what these ETFs hold. So again, you can go to the quote page on Zacks.com. I in fact did a podcast with Matt Tuttle. So you can listen to the podcast as Jim, well, as I mentioned, holds securities that he doesn't like or shorts the securities that he likes. So you will see short positions in these stocks, and Jim will hold long positions in stocks that he loves, like Tesla, like Ferrari. Now, the next one that I'm highlighting is very new. So Roundhill last week launched this big bank ETF. So this ETF provides concentrated exposure to 6 largest US banks. These use swaps as well as equities to provide that position. Now, relatively reasonable expense ratio, 29 basis points. So this provider, Roundhill, believes that the banking crisis and failures of these Silicon Valley Bank and Signature Bank and Silvergate, because of those failures, investors will put more money and they will rely more on bigger institutions that are deemed too big to fail, systematically important banks. And we know that the broad financial ETFs have a lot of exposure to Berkshire Hathaway and then regional banks, brokerages, and insurance companies also. So if you want to hold only big banks, then this is the ETF for you. And I just want to add that this is the first of 6 ETFs planned by Roundhill that will provide these concentrated exposure to the largest and most liquid stocks in a particular sector. They will be launching big airlines ETF, big technology ETF, big defense ETFs, big oil ETF and big railroad ETFs later. Again, let's take a look at what and this whole, as I mentioned, this whole swaps as well as some equities in these banks: Goldman, Morgan Stanley, JP Morgan, Bank of America, Citigroup, and Wells Fargo. Now, the last one that I'm highlighting is by Horizon Kinetics. And we know that energy transition is a big topic, has a lot of interest from investors. But at the same time, we have come to realize that fossil fuel based companies, they are also not going anywhere anytime soon, because this transition will take decades and we still need a lot of carbon-based energy. So those companies are also very important. So this has a dual mandate of investing both in companies that produce carbon-based energy as well as companies that are developing technologies that alleviate the negative impacts of hydrocarbons. This is actively managed, has an expense ratio of 85 basis points. So let's see what it holds currently. So as I said, companies that are benefiting from increasing focus on climate change and also environmentally sensitive carbon-based energy producers. So EQT Corporation, Occidental, Diamondback, Chesapeake, these are among the top holdings in this ETF. All these ETFs are very new. That is something investors should remember, and they are rather small in terms of asset size. So be a little bit careful if you want to trade in these ETFs. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And we will see you next week.